Novethic annual event 8th edition. It is my great pleasure to welcome Jeanett Bergan. Hello Jeanett, you head of responsible investment for KLP, Norwegian pension fund. And beside is Robert Walker, Vice President Ethical Funds and ESG Services for Canadian NEI, Canadian fund as well. So, Jeanett, first a question for you. What are the main points of your climate change investment strategy?
Yes, in KLP we have been engaged in climate change for several years. We are, for example, a Norwegian partner for Carbon Disclosure Project, CDP, which asks companies to measure and report their CO2 emissions. So we've been engaging in that for many, many years. But a little more than a year ago, we decided that we had to be more ambitious. We could not only engage companies and ask them to report, we had to also do some more active steps ourselves. So we took a decision to, number one, divest from coal companies.
When you mean divesting is 100%?
Yes, 100% divestment from all portfolios in coal companies. That's companies that get more than 50% of their revenues from coal mining or coal power production. And now also the Norwegian government pension fund has decided to divest, and they have lowered the threshold to 30% of revenues. So we will follow their decision and also divest more companies.
A little bit like CDC explained this morning as well in France.
Yes. It is, from a financial point of view and from an ethical or climate change point of view, an important step because coal is so CO2 intensive. And in order to reach the 2-degree scenario, which is really what we want to contribute to with our investments, so coal then divestment is a very important and effective tool, but it's something we can do without jeopardizing the risk and return of our portfolios, because we are mainly passively invested out there to get the market returns, and then it's a very attractive tool to divest from coal. Also, that reduces the carbon footprint of our portfolios, which we also measure and report, which is another part of our strategy. The third point we're doing is that we're earmarking new investments in new renewable energy in developing countries. So where the alternative very often is coal, we're bringing to the market new renewable energy. For example, we're building solar parks in South Africa, in Rwanda, in Honduras, and other countries, because it's a very attractive investment, but also from an environmental and social point of view, they're fantastic.
Not as risky financially wise, would you say?
Well, actually, it's greenfield projects, so they're quite financially risky, but at the same time, if you think about other types of investment, they are very attractive because to build a solar park is can be done quite rapidly. There are not very, in terms of the labor you need, you don't need to have very skilled labor, so there's a very nice way to get unemployed people in employment. And then also, you know, the actual building of the park is very kind of easy in terms of compared to, for example, building a great dam or building an oil installation or a coal power production facility. It's a very easy building project.
Or a nuclear plant.
Yeah. And the last point of our strategy is to engage with CO2 intensive companies, because since we are passively invested in the global market, we are invested in more than 3,000 companies. So there are very many CO2 intensive companies in our portfolios that we need to engage in order to get them to reduce the CO2 emissions.
Very good. Robert, what are stranded assets on carbon risk material? Are stranded assets on carbon risk material for a Canadian? Sorry. Are stranded asset and carbon risk material for a Canadian investor?
We believe so, certainly, and we have been, we arrived at that conclusion back in 2001 when we first began to engage companies and governments in a dialogue on strategies to address climate change. I think maybe in the Canadian context, it's even more of a risk for two factors. One is that our stock exchange, the TSX, is heavily weighted towards energy. Up to about 25% of the stock market is in energy companies, primarily oil and gas. So that's just as a factor that Canadian investors face every day. And the second reason, I think, is because the oil sands are carbon intensive and expensive to develop. They are a high cost resource. So when we look at carbon pricing scenarios, which may be coming down the pipe pretty soon, many of those projects look to fall off the table when it comes to being economic to develop, which it has been our expectation for quite some time. So investors really need to focus on these risks and make sure that they have strategies to address those risks and to look at their own portfolios with the potential for decarbonization.
Jeanett, as a Norwegian insurer, what is your perception of stranded assets for fossil fuel energy?
When we did our evaluation to come to our decisions in terms of climate strategy, we assessed the stranded asset theory and the financial implication of such. As we are mainly passively invested, it's kind of the nature of our philosophy that we don't have any views on the market. We don't think there are any systematic risk over time in terms of oil and gas or other industries. There will be stranded assets in the oil and gas industry. There will be stranded assets in the coal industry.
But it's not your responsibility to tell which one.
No, and there will be stranded asset in every industry, because that's the game of the efficient market. There will be winners and there will be losers. But what is really the philosophy of passive investment is that a lot of research tell us that to beat the market over time is really difficult, and we are not trying to do that. We are investing very passively, but with some active divestment tools in terms of, for example, divesting coal companies. And that being said, if there will be a regulation in terms of, for example, CO2 emissions, or we are increasingly seeing governments around the world taking important steps in order to mitigate climate change, and that, of course, will be hardest to handle for the companies that have the highest emissions, for example, coal companies and others. So, the likelihood of stranded assets being affecting those industries and companies that have the highest emissions.
Robert, on the contrary, or on the other side of the table, not here, but you are more active investor. This is the way you define yourself. What would be the difference of approach?
Well, I think we do try to beat the market, and typically we do. Our approach historically has been to both underweight energy at this stage, so we have not invested in coal for quite some time. We maintain some investments in metallurgical coal, but we avoid the thermal coal altogether. That's been one way. On the climate risk, we've also, with a focus on outcomes, we've also divested from companies that have failed to accept the science of climate change, and in some cases have played an active role in fostering unfair and inaccurate discussion around the science of climate change. So that kept us out of ExxonMobil for quite some time, or historically Talisman Energy. But we've also, tied to our active asset management, we've been very active when it comes to engaging companies in a dialogue on what they should be doing to address climate risk, and that's happened on both the energy supply side and on the demand side. And we've also began to engage governments 10 years on the need for a meaningful price on carbon. That part of the file until recently has been a bit frustrating, but there is some good news from Canada, I think, on changes to government, which makes for a more active environment when it comes to setting that price.
And do you exclude fossil fuel energy?
We don't, no. We do engage, we include companies. We are underweight, as much for financial reasons as opposed to environmental reasons. But NEI in general places a heavy emphasis on engaging companies. We do have the Ethical Funds brand, so we are very much focused on producing ethical outcomes. And in our view, we're far more likely to achieve those outcomes by engaging companies in an active dialogue as opposed to avoiding them. Once you sell your shares, you're out of the discussion. So that's a big part of our strategy. And we have seen some very real progress from companies on greenhouse gas emissions disclosure, on carbon pricing scenarios, on increasing the research and development, and I think most importantly, on publicly supporting a price on carbon. This is an element of the Canadian market that I think is not quite seen in the US market, for example.
Jeanett, are you under the influence of the Norwegian fund strategy?
Yeah, the Norwegian government pension fund is a very important fund, of course, in Norway, and also a very important standard-setting entity because it's, government-backed in Norway. So, and we are owned by the municipalities in Norway, so the local government is the customers and the owners of KLP. And so we are very closely linked to the Norwegian government, really, and
would you say under the influence as well?
Yes, what we're actually doing is that we are following the same guidelines. We are closely linked to them in terms of how we operationalize our own strategy. In Norway, the Norwegian government pension fund and their guidelines are seen as a minimum level of standard that you need to be having in place. So we're following there, but we can go beyond and we can kind of be in the forefront. And for example, on the coal divestment and our climate strategy, that was something that we did decide upon before, and then the Norwegian government pension fund decided upon going in the same direction some months later. So yeah, I just wanted to comment on also, if
Sure,
I can, on the divestment engagement point, because KLP has a very important philosophy in terms of transparency. We are fully transparent about the companies we exclude and the reason why, and we also have transparent about which companies we engage and the reason why, and also on, for example, voting. We are transparent about which companies we're voting all of them as much as we can, and how we vote. And really, because in this area, and with regards to responsible investments, we are all aiming at the same thing. We want to achieve the 2-degree scenario. We want it, you want it. So we think that everybody should move in the same direction, and that's why we think...
You mean more transparency?
Yes, because if we are transparent and other investors can follow us, they can, engage with the same companies. And really, our experience is also that when we divest, that is a very strong tool combined with engagement, because the companies really see that we are serious, and if they don't move in the direction we want, they know that we might divest. So there's a very strong synergy between divestment and engagement with companies. And we use it very actively.
Yeah, this is a perfect transition for the last question for you, Robert. Regarding lobbying, is it a strong issue, and how do you cope with this issue?
So energy company lobbying?
Yes.
Yeah. It has been an issue that we've watched. I think sometimes in Canada we tend to import debates from the United States, where the lobbying issue, I think, is quite profound and quite polarized. In the Canadian context, I'm not sure that's appropriate or accurate. As mentioned, many years ago, the oil and gas companies in Canada acknowledged that climate change was an issue. The tendency to deny climate science was really 1 or 2 companies, which we did divest from at that time, using it as part of our signal to the market. This is not going to work for us. But in general, they have been on the record, the public record, for supporting a price on carbon, many of them back to 2010. And most recently, this past year, we did begin a campaign to get companies to speak out on climate change and to publicly support this price on carbon. They've done that. And most recently, 2 days ago, in Alberta, the province of Alberta announced its climate policy, a government which up till now has not been seen as terribly progressive on these issues. Now it is, with a very impressive suite of policies to address climate change. And at that press conference, there were senior executives from Canada's oil and gas sector, and that was very impressive, I think, to get them there. We were a bit surprised by some of the people in that room, and very pleased to see them there as well.
And regarding the transparency that suggests Jeanett, do you think it's a good direction for all the funds to?
Yeah, we strive for transparency as well in all our work, and as part of our work with oil and gas companies, we strive for transparency from them as well on their public policy decision making. And we have seen some very good disclosures from those companies on how they're addressing companies, or how they're addressing governments on climate change and other environmental issues.
Thank you very much, both of you, for attending this interview.
Great. Thank you.